Welcome, Pat. We are
Hey,
back again for another Thursday rendezvous looking at this nuts market, this chaotic market. I mean, what a
I,
week.
what it really has been quite a month. If you look, it seems like I can't put my finger on, it, but what a chaotic. Yeah, it's just been unbelievable. I'm just
It's
the
we've gone from this wave of optimism that says rates are coming down, hurry up, get out and buy. When you look at the Realtor Instagram post from last week, and then
yeah,
I'm like, you're getting ahead of your skis.
yeah,
And then rates went up above 7, not very long, but they came down. And it happens every time. When rates come down, people get optimistic and go, here it comes, we're going there. And then when they go up, oh no, they could hit 8.
yeah.
And it just ding, 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 ding. And the news, stock market down 2,000, up 3,000. It's like, you get a headache.
And that's the thing. If you're the average guy looking at, I feel certainly we're talking to the home buyer, home seller, obviously, but there's a lot of chaos out there, and I think a lot of people you have to just you really have to tune out a lot of that noise because it could really drive one batty. Yeah, John Doe is right. It certainly
Yeah.
seems like it's a new norm. What happened to the days when we just kind of plod along and people remember the days when well, obviously the inventories increased. We'll talk about that, but people would go out on a Friday, look at a couple of homes, put a contract on, pre-qualify them at a certain rate at say 5.5%, and this came in and got the deal done. But I swear to God, it's like you're on your pins and needles like every day. It's just those
It's
last.
interesting too. I went and looked at a beautiful house in Awatuki this week, and these are, I want to say they're first time home buyers, but she has owned a townhome before. He's never owned anything. They're getting married pretty soon, and they went and looked at this house, and it pushed all the buttons for them. And then, man, they wanted it. Second they looked at that and walked in the door, they wanted it. And I've always been a proponent that says fast decisions are usually not good decisions. And I was begging him. I said, now go home tonight, and when the kids are in bed, um, talk about what kind of offer you want to put together because we have time.
Yeah.
Talk to the agent, and then let me know tomorrow what you want to do. But I want to make sure that you are extremely comfortable with this decision because your mom can't make it, even though she's head over heels in love with this house, and you guys are excited. I'd like to see you, you know, look each other in the eye and go, "Can we live here for 10 years?"
Mm-hmm.
And he goes, "No, we want it. We want to write an offer tonight." I,
Well,
I
the
said,
thing of
"Okay,
it is,
I'll do that. But I
well,
want you to understand that that option's there for you."
yeah, that exactly. Well, but also to not refute you, but if they did write an offer, obviously it's not like you got to go through it. They do. People have a 10-day inspection period. You do have time to pull out.
Yeah.
Make a decision. Well, we're not really comfortable. We've had the transactions like, I just don't feel comfortable with this house after thinking about it. You can cancel it. So, but we
I
do
had
have, we're definitely in that. Well, you and I have talked about this the last several months, is that at least we're in this time frame where you can go home and kind of chew on it a little bit versus, 2021, where you had to, literally you had to,
had to make the decision in the driveway.
and yeah, exactly. Or else you're done. That to me is just, I that's not a good way to buy a house.
Well, um, we kind of rewrote the offer and stuff, and they were peppering me with questions all day. Do we know if we heard anything? Do we know? But her mom, and and so I said, as soon as I know, you'll know. And finally, I said, okay, he's presenting the offer at 6 o'clock. That doesn't mean we're going to have an answer at 6:15, maybe in the morning. But I went ahead and made a little video, and it looks like this that I texted him. It says, "Offer accepted,"
Oh, good.
and I just sent it to him, and then waited. And they're like, "Are you kidding?" They were so excited. So,
That's for,
hello,
that.
Jackie.
Hey, Jackie, hope you're doing well. That's a great thing about working with first time home buyers. I really do enjoy working with first time home buyers. There's this curiosity about the home buying process, and they got questions. I love going through the from A to Z as answering any questions they may have. There's a lot of people that don't have patience for that, and because a lot of guys are like, you should, I think sometimes on the mortgage side they assume that first time home buyers know everything, and they don't. I mean,
Well, then you have the challenge of when you do explain some things, you got to go, will they remember this?
yeah, yeah.
So let's take a quick look at what the market's saying. As you know, I predicted that we'd have a slew of expired listings, and it did affect our ticker down below last week, but not so much this week. We're still hanging around 25.5, right?
Hmm.
But our new listings have new listings have jumped up.
Hey,
New
hey,
contracts
Rick,
have gone down.
can I ask you what? So when you say 20, the market, what? Just to explain to people what 25.5? How many? What area does that
20
encompass?
25,000. It's in mostly all of Maricopa County and part of Pinal.
Okay.
So, so we have coming here record low in transaction volume, ever increasing inventory, stubbornly high rates, mortgage and student loans forbearance, ending general economic deterioration. Maybe,
Yeah.
we're going to talk about that too because it all depends. What? Surely prices will come down? Question mark. Well, let's look at some of the numbers here. First thing I want to look at is months of supply did go up. They've been climbing down, and they went back up to 4.2. That's not an alarming months of supply if you say that 4 to 6 months is normal. And then here's the active listings where I thought they'd start kind of plateauing out here. They did slow down a little bit right here where
Hmm.
they came on. But based on the numbers that I'm looking at on my 7-day moving average that I crunched this morning, this number's going to grow unless contracts came up. In fact, the interest rates went up this week. Of course, who knows what they're going to be tomorrow or Monday. There's no catalyst to getting the sales up much beyond 3,200 a week that we've been seeing. But here's good news for buyers and not dire news for sellers. But the average list price has come down to the 2022 levels, way down from where they were last year. This is what people were asking. Okay. So, they got the memo, and
Now,
we're
what line?
seeing
What line is this year? We'll call
this would be
the red.
the red one.
Okay.
So this is just comparing to last year right there. Last year, everybody jumped out of the gate very optimistic. This year, they came out very optimistic. It's January, here we go. And they found out, well, that didn't work. Let's pull the price back. So they did. Then you compare that to the number of price changes we had per week, and I thought for sure that they would go up, and they did. They dipped down to 34.95 and went up to 36.47. So, the closer we get to the end of spring, the more price reductions we're gonna see. Now, this one's interesting here. I'm gonna go by a few cities here. Here's Maricopa. This is a monthly average sales price per square foot. Now, they're one of the lowest numbers on the Cromford Market Index. When it comes to a buyer's market, I think they're 58.
Hmm.
Normal's 100. And so they haven't, you know, they started out the year at $185 a square foot, and now we're sitting at 187 a square foot.
Hmm.
So nothing dire there. Now, if we layer in Chandler, it takes the Maricopa and just puts down the bottom.
Wow.
That's pretty flat, right?
Hmm.
Okay. Gilbert,
Yep.
that's about the same, pretty low. Paradise Valley's probably going to flop around a lot. Yeah, look at that. Way up here. They've had a good year and a little bit of a downturn. Peoria, let me get rid of Maricopa here because it kind of messes up the chart. And this is Phoenix. So Phoenix up and down a
Wow.
lot, but they're down considerably from where they were at the beginning of the year. And I
What was
wanted
that?
to
Can
hit
you go back to
Peoria.
that Phoenix one? See what was the high?
The high was 350.
What's the
Today we're at 334.
okay? 350, 334.
Yeah.
Yeah.
Got a comment here. What's the price
5%.
dead zone for Arizona, i.e., price range where there's no activity? Boy, we did see earlier in the year a real slowdown between 4 and 800,000.
Yeah.
I'd call 600 kind of the challenging zone. I wouldn't say dead. It depends on where you're at.
Well, I think that's obviously dependent on. I think that's all related to rates, obviously, because
Yeah, yeah,
typically people 450 to 800, 900,000 typically get a loan. You see a lot of what I've seen in the past is a lot of people that million and a half pay
yeah,
cash.
yeah. Yeah, John Doe says we've been in the dead zone last year or more. Buyers
Yep.
simply can't afford this. Well, we have and we haven't. There's still I know a lot of agents pretty doggone busy.
Yeah.
It's
It-
it's it's slow, but 3,200 a week, and I mean, there were two homes that I looked at last week that are under contract that you would look at. One was 400,000, the other one was 650 and 659, and went for 650. Here's the total Cromford Index, which is down to 79. Now that's not an optimistic picture right there. If you look at this,
yeah.
that's forward leaning. So
But
for
I'm sorry to keep jumping in, but I try and get more engaged with you. Like, I don't want you to take over the whole show.
well,
You
I can pop you off in a New York minute. Just test me.
yeah,
I am the
I know
controller of the
that's
button.
that's why I try to kind of jump in because I know you could just turn me off like
Oh,
like a
fine.
flashlight. But
Yeah.
I mean that basically isn't that saying that we're going toward a buyer's market?
Well, we are in total on the market index. We are in a buyer's market. There's only a couple places, two or three places in total where it's considered a seller's market. So we are there. But if there's this affordability issue, what's it really mean a buyer's market? Because this is just a measure of supply and demand.
Yeah,
So what, buyer's market, wait, I still can't afford it. What do you mean? But there are people that are in a position or finding some pretty good opportunities out there. Now, here again is annual appreciation based on annual average price per square foot. This is this year. Flat. Remember, Zillow said we were going to be up 1.6. Somebody else said we were going to be down 3, and we're
well you had ranges
4.1.
anywhere from what flat to basically up 4 or 5%, 6%.
No,
Wasn't there one that
this was when the rates went up, right? Boom.
yeah. Yeah.
So we're stuck. We've been stuck.
Yeah. Well, we've been I mean, honestly, I mean, you and I have been, I mean, we kind of took this, our show from every week to 2 weeks because, we want to bore the living hell out of everybody every week. Just,
Yeah. Where are rates, Pat? Same.
oh,
How's
same
sales,
old,
Rick?
same,
They're same.
pretty much the same.
Yeah. Be sure and
Okay.
like and subscribe. Here's the chart we showed last week, and here's the same chart this week.
we sound like a married couple that's been married like 55 years. What do you want to do? We're going to do the same thing.
Yeah. What do you
Do
want
the
for
same.
dinner? I don't care.
I don't care.
So your 10-year Treasury, man, the past 3 days, Pat, what the hell is going on?
Yeah, I mean, you look at it, the 10-year Treasury. This is basically the last 5 days. I mean, we've been, we cut below 4. Obviously, 388 was the low here back, April 4th, and then it's just been a climb upward. It's so we're sitting at 4.474 on the 10-year Treasury, and it's last couple of days have been was pummeled, and then yesterday was some better news. I mean, I can't figure. Nobody can really figure this market out. I mean, Goldman Sachs. It's kind of funny. I was pulling up some information. This quote. They were forecasting a recession, unemployment to increase to 5.7% in the fourth quarter. Then 90 minutes later, they reverted that to their previous non-recession baseline, is what this one press release said. 45%.
Yeah, you got to wonder how that happens too, right? They come
Yeah.
out with this news, and then what? Did they have another meeting in the break room? And they go,
Yeah.
you posted what?
Yeah. I mean, can you imagine these big investment bankers are like sitting there like, oh, Jesus, what's going to go on now? I mean, that's where there's just a lot of confusion in the market. You got to believe that China, you guys are never. Thank you.
That's a good way of
40.
saying we're not normal. I get it. So
Yeah,
that's
we're
good.
not normal. I'll take that as a compliment. But I mean, you got to believe that China and U.S. will, obviously come to the table because obviously they said that the tariff talk or the tariffs were not 125 but 145%. I mean, if I was just an average guy, out there, I mean, you got these analysts from every analyst on. You could turn on 5 different news stations. They're going to have 5 different opinions as far as what the hell's going to go on. Nobody really knows. I'm just trying to focus in on rates. See where we're at rate wise. Rates they went lower last week, Thursday, Friday, and then they obviously got schizophrenic on us. And that's the thing of it is a lot of this crap happens over the weekend.
Yeah.
So I mean, Sunday, you're sitting there like, oh great, you're like, oh, Sunday afternoon. Wasn't it Sunday or this weekend they announced it, and they're kind of going back and forth.
The
So then
tariff,
Monday,
the tariff, I think he did that on, I can't, it's a
it,
blur after a while.
it's a blur. So I'm just trying to zoom in, on information. I mean, today you look at it. I mean, hell, the CPI numbers. I mean, if we go back to the old, remember the days when we talked about the CPI number? Do you remember that? When actually that had some
Yeah.
effect
Yeah.
on the market. I mean, Jesus. I mean, the CPI for March came out negative 0.1%, and the forecast was a positive 0.1%, and the previous was 0.2%, month over month. So, I mean, the CPI number was great, but the problem is that's March's number.
Yeah. Yeah.
So
Exactly.
we're
Yeah.
looking, the Feds, with the Fed, the Fed, when they came out with the news, that all this news that came out a month ago is stale now. So we're in this last week and a half. You just, if anybody's got a real answer, I'd love to hear it of what the hell is really going to happen. I mean, like I said, I'm just trying to get some gauge on it. To go to rates, I'll flip over to rates here real quick. I mean, this is my parameter that I've been using the last, over the last year and a half, 2 years, or maybe the last 5 years. I've been trying to stay with one parameter: $475,000 purchase, 5% down with 780 credit score. And one of the lenders, Provident, they're an 8-paper lender. I mean, I pull up their rates, and we're sitting at 6.75 with a cost of 2,200, 6.875 out of a cost of 1,100. So I mean, there's obviously I've got different lenders, I've got different costs. So it seems like I try, this is my list of lenders, but I certainly don't go with the top price lender all the time because I sometimes don't trust some of these guys. I know I go with lenders that I know that are going to deliver quickly and whatnot, but that really hasn't changed that much, with these rates. So they've been up, they were up and they went down last week. Now they're kind of back, the range that we saw previously. So that's what I'm really focused in on is what the hell's going on with rates. Because I don't know about you, but can you imagine being a home buyer trying to figure this crap out?
Yeah. Well, even, the comment that we had earlier said, the economy is going to get bad. It's like, maybe. I mean,
Yeah.
because I watch one guy, it's just going to take off. It's going to be amazing. The other guy, it's going to be awful. It's like, I don't have this knee jerk. I, I'm just,
You,
it's
you
my
can't.
wise old age now. I go, well, you know what? I'll wait it out, see what's going on.
Are
If
you
I
the
was,
are you the old bull? I'm the young
I,
bull. You're the old bull.
yeah, yeah, I'm just, well, decrepit. But like I told this young couple, looking at this house, I go, I want you guys to look at this house as you're going to be here between 8 and 10 years. If you think you're going to live here 5 years and sell it, for more, don't come into this way. And he goes, I want to stay here forever. I said, all right. So he said, I want to pay it off. And I was really happy to hear that,
Yeah,
it's like,
yeah.
so, and you don't, because in the past few years, it's, geez, I could hold it for 2 years and sell it. And I see a lot of listings on there where they're trying to sell it, and they've only owned it for 2 years. It's
I
sitting
I've
there.
I've seen that recently. I've gotten some people that bought like in 23, 20, late 22, 20, 20, 23, 22, 23 that they want to sell. I mean,
You're screwed.
you're probably not in a good position. I mean, it's not like they've crashed, but it's not like you've got 50% equity, you know?
Well, look
So
at Open Door. They couldn't make money when real estate was going up in 2020 and 2021, and their stock was $44 a share. I just looked at it before we got on the show. It's 98 cents. I don't know when it's going to get delisted, but 98 cents. Get, Jackie's going to send us a magic 8 ball. You can ask questions and shake them. We
yeah,
should do that.
we
Where
should.
are rates going? Screw that whole chart you got, Pat. Just shake it and
Yeah,
go. We never know.
yeah. I
And
mean, but you look at the, go back here. Um,
well,
go
you're
back to the.
working me to death on this mouse here. So
Oh, sorry, but I mean, this is the, this is a 5-year, mortgage-backed security. This is the channel that I'm saying, kind of we're stuck in, this. But you look at it, yeah, that's a 5-year. This is since about December, end of December 23. So I mean, you look at the last year, we've had some gyrations with the mortgage. This is the mortgage-backed 30-year mortgage-backed security, 5.5% coupon. So you see these spurts that we have. Which spurt are you going to get when you buy a house or lock in a rate?
I know. Yeah.
You know,
Well, we liked it just a while back where things were kind of staying level. We said,
yeah,
good, good.
yeah. Remember that?
Rates are kind of staying there. Prices are coming down slowly. Let's hope we can just stay there. And then what
Yeah.
do we experience this week? Stock market up or down 2,500, down 2,000. Next day up 3,500. And my neck hurts.
Well, I think I think people that are buying a home have got. I mean, because you could get whipsawed by this information. I mean, I'm sure there's gonna be people like, should we buy now? Should we wait? I think you get that in a lot of people, if I'm not mistaken. Do you feel that way too?
Yeah, yeah, yeah. I mean, look, the amount of people sitting on their hands waiting for one thing or another is pretty evident. And the other thing that's very evident is whenever we see a lower shift in mortgage rates, mortgage applications go up. So
Yep.
everybody's understandably, the house prices have been higher, and we just looked at some of the charts. They are making an adjustment, and in many parts of the valley, and so the people that are waiting, when they see an opportunity in rates, they have been coming back in the mid sixes.
Yeah. And I
Now,
think.
whether or not we're going to get the mid fives, I don't know. I
Well,
mean,
I saw.
I'm not trained in this,
Well, yeah. I
forecasting.
feel. I feel like I've been trained in it, but some days you kind of like you wonder. It's just like it's a golf pro that Roy McIlroy can shoot a 62, but then he goes out and shoots an 80. It's like, okay, do I really know how to golf? I don't know
Yeah,
what the hell's going
that's right.
on. But I mean,
Yeah,
it's. I think people once again. I mean, it goes back to those 2-1 buy downs. You could do a 1-1 buy down. I mean, if people really are in a position where they don't want this rate, they can obviously use that. I've said this ad nauseum, but the 2-1 buy down, the 1-1 buy down, it's going to get your rate. If you do a 2-1, you can get into the high fours. So at least gives you some stability for a couple of years.
I got email last week from, I can't remember the builder, 3.99.
Yeah.
And
But you know what, though? I tell you what, I mean, the problem is I ran into a situation, another loan officer in our company, and as a matter of fact, if you give me 2 seconds, I pull up the email from him. Just bear with me here 1 second, because just talking about that, he was talking about a lady that bought, or a couple, or whoever, some person bought, and the problem in that situation, give me hold on. I should have, bear with me here.
yeah, I don't want to see the email from your sister, so.
Or my match.com emails.
Yeah, no, I don't. Wait, are we 23? Yeah, 24 minutes.
Yeah.
Little inside joke there.
I can't find it. But anyway, he was
Okay.
talking about, I'm going to try to sum it up. Basically, this, they bought maybe about 2 years ago. They did the 399, they're in a area that's got this 399 with actually a buy down. I think it's a buy down from there, so you can go even lower. But there's other people now that they're trying to sell in that area, and they can't compete with the new builds. They're in that
Yeah.
community.
Yeah.
So
Yep. Yeah, we're seeing that a lot. Buckeye, Surprise, and Maricopa and Queen Creek. And
if you're
John's here If the stock market continues to unravel, the consumer loses purchasing power, exacerbating the lack of demand. If the stock market continues to unravel, you can also come along and say, what if it turns around and it just takes off? Because I had a father-in-law that traded commodities, and he said, for every chart that you see that goes up or down, I can give you a reason why it went up, and in the same breath, give you a reason that it went down.
Oh yeah, yeah.
Like corn. Okay, corn went up this week because there was a storm in Kansas and destroyed a lot of crops. He says, I can also say corn went down this week because we found more supply in Ohio.
Zimbabwe. Yeah.
So he said you can always, and so you can say the same thing about the stock market. It's why did the stock market go down? Well, because it did.
Yeah.
They don't like uncertainty, and that's what we're seeing right now. And again, I'm no stock market expert, but I think all you can do is sit back and watch.
Well, I think, like you said, it goes back to what I said earlier, though. I think if you're really in the home buying market, from the home buyer, I mean, you have to kind of just block out a lot of the noise and say, okay, where are the rates? What can we get? How can we get a better rate? With a buy down, and let it be at that. Because I think it's just, I've always noticed in the last 38 years I've been in the finance. I was a stockbroker for 10 years, and things get rattled for a while, then they get back to normal. I just like to see them get back to some normalcy, and so we don't see these day to day, week to week, and unfortunately, it doesn't sound like we're gonna get out of this for for some period of time because those tariffs. I mean, they did put the pause on for 90 days, so.
Yeah, we'll see what happens. I mean, it's hard to tell. Here's monthly cost delta between rents versus mortgages never been wider. Without major rate relief, the only way buyers will come back. Yeah, I agree. I mean, there has to be a catalyst for them to come back.
The mortality, when you get volatility in the market, from our standpoint, when rates get better, here's my situation. When rates do get better, I'm just gonna give people a little bit of background. I mean, when they do get better, let's say on a date, a couple days, lenders are always sketchy to give you those gains, all the gains that come back. I mean, I've seen the market up, like say 60 basis points, and you're like, rates should be lower, but they're not. So, because lenders always hold back, because when you get this type of volatility, their hedging departments their hedging departments are going nuts, and so when they hedge, they're always going to hedge to their benefit. So I mean, you got people like, oh, rates should be down lower, and yeah, when you see these types of time frames, rates don't really go down that much lower on a given day to day, because it's like, well, we're just going to sit back and we'll see what the market does, because they don't want to be locking. Let's say rates went from 7 to 6 in 2 days. They don't want to lock a lot of people at 6, and all of a sudden the market turns around and it's back to 7, 3 days later.
Yeah.
So that's a crappy. So that's where you see a lot of volatility. That's what drives me nuts on our end.
Well, let me show you what I'm seeing here in the Phoenix market, just from a headline standpoint. Now, here, this Phoenix Business Journal, historic Phoenix building to get makeover. Home Depot moves forward with Buckeye land purchased. Recent report predicts upcoming boost in cold storage real estate. Several new hotels in the works for the East Valley. Abnet leases Valley facility for $47 million, plus more deals to know. Denver developer to begin construction on historic building. A host of NFL regulations leave student athletes largely unprotected. More deals, less money for AZ startups in Q1. Chicago, Utah developers near completion of Goodyear apartments. On and on and on. There is stuff going on here in the valley, and a lot of it's not really bad news. How Arizona ranks for higher home ownership costs. That's not good news.
Yeah.
How tariff turnaround helped Arizona public companies. So there's a lot going on. You can get drunk with it. But I wanted to kind of shift gears a little bit and ask the audience what they think of this, because you and I talked. There's a thing called Clear Cooperation, and Jackie, I know you've heard of this too. Clear Cooperation is the multiple listing service. If I list your house, Pat, I put it on the multiple listing service, and it's shared with everybody. We're all cooperating and sharing our data. I could see the house on this website, that website. Zillow's got it. Trulia, rickhelps.com has it. We're sharing it. Well, now you've got some companies like Compass that want to develop this these private networks, and they think it's going to be good for sellers. I don't get it. And it's a lot of talk within our industry, and the public hasn't really probably read about this or heard about it, saying you can exclusively list your home with us and it won't have to be on the market for a while. And Zillow's saying, we're not going to play. They're
Yeah.
not going to take public. I can put a listing on Facebook. I can put it on my website and keep it off the MLS for a while, thanks to a decision made by the National Association of Realtors called a delayed marketing policy. What's the advantage of delayed marketing? That's like 72 sold, you know? I mean,
Yeah.
it's you have less eyeballs looking at it. And it says, in a move designed to create an even playing field, listings that are publicly promoted to consumers but not made widely available via the MLS will be barred from Zillow.com starting in May. EXP said the same thing. They're partnering up with them, saying, we're just not going to play in that sandbox.
So they're not
It
going to play
doesn't
in the
make
exclusive,
sense to me.
huh?
It doesn't make sense to me.
So they're not going to play in the exclusive, the exclusive playground.
No, no.
Yeah.
If you're going to list a house and you're going to call it a delayed listing, then it's not going to hit Zillow until you make it public on the MLS.
Which is good. Right.
Excuse me, I got a little tickle. Big tickle. A way to operate from the shadows a bit. Transparency feels like the best policy. Well, if you're a seller, I mean, hey, put my house on the market, but I'll tell you what, just don't show it to everybody yet. Okay?
Yeah.
It just,
Yeah.
hold it back a little bit. Maybe just only to people in New Mexico. And, I don't know, 15
Well,
minute cities in
I
the
had this
future.
one lady. I'm not going to, got her house listed, and I told you about this. I don't. I forgot the exact specifics, but there's a house listed across the street, and she asked to take their house off the market so they could reset the comps.
Yeah, you told me about that. I mean, I can't imagine as a realtor, somebody's door. Hey, we're trying to sell Sally's place across the street, and we don't want the comps messed up because we've noticed that yours hasn't sold. Do you mind taking it off for 45 days? Boom, right there.
Is that called collusion?
Yeah, it's called collusion.
Yeah.
No wonder the NAR got sued.
Yeah. Yeah.
Yeah, there's just some weird stuff going on out there. It's and it's there's always a lot of lawsuits that happen in the real estate industry. But again, what solves that? Clear cooperation.
Yeah.
The multiple listing service and National Association of Realtors has very clear rules on listings. You go back to when there wasn't a multiple. Oh, let me just talk about Panama because I went down there. Panama, you'll see a house. It's $220,000, and it's at number one Panama real estate office. $220,000. You go across the street, it's $210,000. But people call the seller directly. How much you ask for the house? Oh, $190,000. So the people that are buying it from the real estate agencies, they went and talked to them and said, what do you want for the house? They go $190,000. Okay, they can pad whatever they want on it. Plus, they don't have a multiple listing service.
Mm-hmm.
And a multiple listing service is designed to where the information is supposed to be accurate. So
Yeah.
the square footage is supposed to be accurate. What goes with the house, what doesn't is supposed to be accurate. And if it's not, we get fined. And so down there, it's a free-for-all. And so you got, you're looking at, well, let's drive down to this real estate office down there with the red sign and see what they're asking for that house. Finally, they just get exasperated and go, well, let's go talk to the owner and save $20,000, $30,000.
Yeah.
Jack here says, I don't like it. When I started in Chicago, there was no MLS in the city. It was broker to broker. This definitely isn't the market for it. Broker, yeah, that'd be people used to, before there was such a thing as a multiple listing service, just meet underneath a tree or in a coffee shop and go, okay, I got 2 listings, Clem, that I got last week. What do you got? And they shared stuff. I also remember going to real estate offices and flipping through the books. I only see it with celebrities, etc.
Okay, I don't need to hear the story that you walked 10 miles through the snow to do a listing and the old days of real estate.
Yeah. They're going to scrape single family homes off the land. No, they're not. So get
Well, they
ready.
did. I know one city they're doing that. It's
Maybe.
Malibu, that
Yeah.
area, LA area, where they're doing a scrape on all those homes.
No, but before you had the internet, the title companies would print out the listings, deliver it to the real estate office, you put it in your book.
Yeah,
So you'd sit in their little conference room in the desk of the realtor and you'd just flip through that. What's new this week?
yeah.
Because they only got updated on Fridays.
What about those? What about those Phoenix? Those new home magazines in the store. Those.
How valuable were those in 2021?
Yeah,
By the time it got printed, it was already sold.
yeah. We're definitely in an age where you get a lot of information quicker, and I think it tendency to confuse people. I think you just got to keep ahead about yourself, and the
Well, the
cool.
fact that we're getting information quicker is also making us have a lot more knee jerk reactions as
Yeah,
well,
yeah,
to
yep,
your earlier point. But that's the way the market is. And I want to remind everybody that we have a network here. So we've got Jessica, Ruby, Jackie, and this guy.
yeah.
Um,
God, he's a good looking dude.
well, until I pull out the handy dandy magnifying glass, then
Yeah, I know.
there's a couple flaws there, um, but we won't get into that. But we all work together, so and I put on here how long these agents have been around. So because I don't like, if you're brand new, I'm probably not going to send you a referral. Jackie's been around since '89. Ruby's been 2001. She's showing homes for us today in Sun City. Jessica's been around since 2003. She's been helping us a lot out in the East Valley. So we don't have a lot of rookies floating around out there. But just want to let everybody know. Just go to rickhelps.com and see that. And then also, before we get here, what do you think? What's 77 as? Why do you think they build crap stick build? Get real. So they're building them lousy so that you can tear them down, I think is your assumption. Okay. Well, like everything else I've said on here, I'll just wait and see.
Yeah,
Scrape. I saw a listing. It was by a Windermere agent that was Tempe. It's 500,000. And you know how Arizona, they're nothing but these stucco homes and they're all brown and they're all ugly. Think of this, a beautiful little 2100 custom built home, just absolutely gorgeous. And there's some really neat neighborhoods up in Tempe. And you've got a lot of smaller custom built homes in your neighborhood too.
yeah, yep,
Um, so we're not all just brown and stucco. Some neighborhoods are. You just
yeah.
drive down the 202 and you can see that adaptability and versatility and longevity are key. So
Well, that's one thing about Arizona. I mean, if you think about it, just not to step back quick. I mean, there's a lot of availability for different types of homes. Custom, semi-custom. Because like you go back to the Midwest, you got the same style for the most part.
yeah,
You
go
know,
to the North Valley, Moon Valley up in North Phoenix.
yeah. There's some different custom homes all in the stretches of the valley. That's for sure.
Yeah. So you gotta know where they're at. Now, if you're just driving around in Queen Creek and Maricopa right now, then I would tend to agree with you. Geez, they all seem to look the same.
Yeah, yeah,
That can be a little depressing, but it's not necessarily the case everywhere. But this one really caught my eye. I meant to show it on the show today, but I forgot to pull that up. So now I'm not gonna say we're not going to be on next week, Pat, because if something happens, we'll be on. But we're not going to be on if we're boring. But be on the lookout because Caitlin McCake and I are going to do a show together, and it's going to be titled "Do We Agree?" And for the most part, we do, but I'm just teasing everybody up with that one. Haven't had her on the show for a long, long time, and she's a lot of fun. So,
that's good.
you going to get any golf in this weekend?
No, I golfed, like I said, this morning in a charity golf outing, but no, I'll probably watch the Masters. So just trying to get some stuff done on the computer, trying to figure out this market. So, but
Well, I describe my golf game as I've hit some of the finest houses in the country. So,
I was hitting the ball pretty good. So, but
sounds
no,
good.
we'll see what happens. It's gonna be interesting to see. Just to wrap. I mean, I think in terms of rates, I saw this guy the other day that he was from high up there in terms of the mortgage business, but he thinks we're going to be stuck in this. He he kind of said what I say is that we've been stuck in this range, and he goes, I think we're going to see a lot of volatility in that range. You know, so I mean, is it sexy? No, but I mean, like I said, I like to see less volatility, more a calm market in terms of rates. But it's just day to day. You know,
Yeah, yeah.
the numbers. But like I said, to go back to CPI numbers, I just had to laugh how we had a really good CPI number, and the bond market got hit in the afternoon. The mortgage backed 5.5% coupon dropped 65 basis points. We saw kind of like the last couple hours just kind of falling off the cliff.
Well, we're
So
throwing too much at them right now, right? I mean, it used to be we just watched CPI, we'd listen to see what the Fed was going to say, and then
yeah,
the bond market would react. Well, now you got trade deals going afoul. You got the CPI. You got the Fed saying, "Well, we're going to wait till we see the numbers," and then something else comes up in the news, and the bond traders are going, I'm dizzy."
yeah. I think like people refinance. I think last week people were getting ready to refinance, but then that that was about a 24 to 48 hour window. I think if people do refinance, I think you have to get. I think I said this a couple months ago. I think you've got to get your your target rate kind of in your back of your mind, and just wait. And you got to be ready to pull the trigger. I mean, because it's one of those markets.
Yeah, if you're truly looking for a house, I mean, you've got time now.
Yeah.
And lease to purchase homes. I have never had any success with that. Sometimes because the people that are doing a lease to purchase are probably got a bad credit score, so they're hoping that a portion of their payment goes towards the down payment, and then by the time they're ready to buy, the market's improved, and you're not ready to sell for them. So the agreements are kind of hard to craft, and
Yeah.
it's just you don't see very many of them actually, you know, show
I,
up. I
I
mean,
saw them. I saw them several years back, a lot more. I mean, because hell, you can't to do that. You're really locking yourself into something that you don't know what's going to happen next year and a half. I mean, I'd
yeah,
rather be buying something on the market on what I know is basically the price marketed to the price that we're seeing right now versus what a year and a half ago.
yeah. I was going to show you here. As long as people are talking about these awful Arizona homes, I mean, really, if you've got 50 million, this is for sale. Um, it's,
Jesus, holy, wow! I
so
didn't give you authorization to post my home, but that's okay. Go ahead.
no, that's okay. There are no pictures of you in the pool. This is all a rendering. I think it's a
Oh,
home that they're going to custom build for you
okay.
for only 50 million. But it's up there, Paradise Valley, where you can see
Wow.
the city and stuff. And that I'd
Jesus.
imagine hanging out there. I mean, so yeah, that's just one of them boring stucco. Hey, T. Adams, they going to scrape this one?
Yeah.
Oh, we're picking on you, but we like having you on the show. So, but anyway, I was getting ready to sign off, so I'm going to do that now. Pat, thanks for joining me again. And
Yep.
everybody, thanks for showing up. And if you haven't signed up for my newsletter yet, how come? The link is down below. Take
And
care.
I'll throw it. One last thing is, if anybody wants property, one of those, we offered it last year, a property profile on something you're looking at buying or selling. Send them your address, and I can send out that property profile. So,
Yep.
so
Sounds like a party.
all
All
right.
right. Take
Take
care,
care,
everybody.
everybody.
See ya.